Hello, my people. I hope you are good. Now, as I promised that I'm going to come back and I'm going to teach you about the time frames, and I'm going to teach you about the candlestick, the risk and reward ratio, the take profit, and the stop loss. Today, it is the day. Now, I want you just to do something for me. I want you to do just something for me because this is the past. This part or this video, it is the best one, that it will help you to understand forex deeper. If you see that if you have seen yourself, like, let me just ask you one question before you continue. When you are starting, or when you said to yourself that I want to learn how to do forex trading, you didn't have any knowledge about forex, right? You didn't have any knowledge about forex trading. You were saying like, forex is this. Forex usually gives people amount of money. It's okay. Forex have money, makes people rich. But remember that one thing that I told you, that if you are here just to chase, quick to be rich money, or quick money, I'm sorry, but I have to disappoint you. This is not your praise. If you are just here just to be quick, rich, if you want to be rich quickly, this is not your praise. Just go and look for another place, because forex, it will humble you. Forex, it will always humble you. Sasa, to cut the wrong story short, story yangu ilikuwa hivi. Wakati tuanze forex, wakati tulianza our trading forex classes, the introduction, hauko unajua vitu mingi, but for now ushajua couples of things. Ushajua what is a market, what is the currency, the types of currency, what is a bullish market, what is a bearish market. You deserve what? You deserve to be congratulated. I myself am going to congratulate you. Well done. Let me just clap for you just once, because not everyone were meant to learn forex. Forex it was being created for the banks, for the hedge funds, for the institution, for the hedge rate, private institution, the retailers, like the big institution. But few people, few traders, few individual traders, they were the one who were meant to be trading forex. You are one of them. So therefore, feel free to accept yourself, because you will be the first one on your bloodline to be the richest. Because forex trading is whereby you just like strip, you are making money. Forex trading is whereby you don't need to be like, how am I going to say? Forex trading is whereby you don't need to be like tired. Like, you should work hard. Do you know that slogan that they had back then? The slogan whereby you usually say that you should work hard. Sorry for the noise. Where I'm saying, there are some people outside there. They are making some small noises. Sorry for that. But focus on my voice. Please focus on my voice if you want to learn. Avoid the backup noise, the background noise. Focus to my voice. Where are we? Yes, you be the first one on your bloodline to be the rich, but you will never work. They will never see you going to work, but you will never rack money on your pocket, on your M-Pesa balance, on your bank, everywhere. they will be seeing you have money, but they will never see you going to work. Believe me, I know what I'm saying. I've never gone to work, but I have never lacked money. Even if it's not that amount, the big amount of money, I have never lacked. In one way or the other, I have some small amount of money here, there, here, there. So therefore, be proud to know Forex. Now, let's go back to our main business of today, right? We are going today to learn about what? Time frame, candlestick, the pips and the lot size. We won't do what? We won't talk much about it because that is another level, advanced class. By the way, guys, when we finish up to where the reverse chart pattern, we will be like, we will be like finished on the beginner's class. So therefore, on the advanced class, that's whereby we will be like going on a live session. And I don't know how that live session we will be like holding it, because it needs a lot of attention, it needs a lot of calculation, it needs a lot of, you just know that the advanced class, it won't be easy and it won't be hard. It's just the only thing that it needs, it's your time, your attention. That's it. Give it your time and give it your attention and your focus, and you will be good to go, because we are supposed to be like going into the market, analyze the market, then come back, place some trades, and call it a day. I don't know if like how am I going to tell you, but don't worry, I will know what to do. I don't know if I will be like, oh, I know what we'll be doing. In the advanced class, we have a Telegram channel, right? For those people who will be like who will be not able to come on the live session, I'll be sending some signals. I'll be like every day, I will try to my best every day. We'll be like holding to, like, let's say, how many sessions in a day? 1, 2, and 3. 1, the first session, it will be on the morning. During the day at 8, those signals I'll be sending them. In the evening, or not evening, afternoon, around 3, saa 9 ya jioni. Sasa saa 9, saa 2 ya mchana, saa 9 ya jioni, saa 3 ya usiku. 3 section, 3 signals, 3 take profit, close of the day. So therefore, I don't know. So therefore, be ready. Sorry for that. I want to make sure that by the end of the video, we have covered all these topics. I have shown you. I will be like sending a link whereby you will be creating an account. If you create it, well and good. If you don't blame me. Don't blame me. I've done my part. Now do your part. Sasa, create your part. Deposit your amount, the amount of money that you have. Let me just don't deposit the amount of money, right? Because I don't know if you are ready. I don't know if you are ready. Are you ready for the next session to deposit amount of money? I don't know. I don't know what we are going to do. You will tell me what to do on our WhatsApp channel or WhatsApp group. You will tell me what to do, or what is the next step that you are going to take, because my plan was to finish all these topics today, from the time frame up to reversal chart pattern. No, the reverse chart pattern, that is another session, another class for advanced. The order block, that is another session for advanced. Liquidity, it's another session for advanced. The pips and roadside, it's another session of advanced class. So today I want to cover time frame, candlestick, reward and risk ratio, risk and reward ratio, take profit and stop loss, and risk management. Those, how many? 1, 2, 3, 4, 5, 6. 6 subtopics today. Boom. End of the class. I will do 3 classes on this video, and then 3 classes on the another video. So let's start for the another class. Today is on when? Today was it's on yesterday was on 18th. So therefore today is on 19th. Well, I post it. I may not get the amount of money to post it, or the time to post it tomorrow. So therefore, let's just do this. 18th June 2026. Because I had another video yesterday. I created another video yesterday about the same thing. But because this is a live session, let me just record it today. But I'll post the one that I recorded yesterday, because that is much advanced and simpler. Time frame. Time frame. That's it. Nothing much, nothing less. And you will say let me just type all those 3 subtopics, then explain it all of them at once, right? Now guys, that is it. Today's class was short, simple, not complicated. Somebody told me that I usually complicate some things when I'm recording some videos. But somebody one day told me, a friend and a teacher still, he is my teacher, and still he is my friend. He told me that when it will come a day when you start teaching, it doesn't matter what you are going to teach, but it will come a day when you are going to teach. And the same process when you are going to teach, the students that you will be teaching, they will be like, all the eyes, the ears, your attention, all the attention will be onto you. So therefore, if you will be serious all the time, they will take all the things seriously. And sometimes seriousness doesn't mean that you will get everything. And I was like, what are you trying to say? He told me that when you will be in a situation like that, the thing that you should be doing, it is this: take your time. Take your time. During the class, try to be like, to bring some another perspective way of teaching. Not all the time seriousness. Try to bring another conversation, so therefore that whenever, even if they will forget the things that you told them during the class, they will remember that joke. And still on the same process that they will remember that the joke, they will start remembering the things that you taught them. So therefore, it will help them. The joke that you cracked in between, or the conversation that you brought in between the class, it will be like a booster in the future for them to remember the things that you taught. So therefore, when you see me giving some stories in between the class, don't worry. I'm trying to nurture your attention. Nurturing, you're like trying to get the jokes part of your brain to nurture some things, to capture these things that I am telling you right now, so that it will help you. My time it has been gone. I have only like around 30 minutes over there. Less than 30. Let me just say that. Less than 30 minutes to finish this class. Let's start where we started on a time frame. And we have said that this is the duration of time which helps you to analyze the market in different hours during the day. Self-explanatory. Candlestick. Now that is another serious thing. A candlestick. I can teach you the introduction, perfect the introduction. But if I won't perfect in advanced class, if I won't perfect you in the advanced class, it will be for nothing, because I have taught you the beginner's class, the introduction, the terms and terminologies. Because allow me to ask you something I have remembered. The things that I'm teaching you right now, are you writing somewhere? Because in the future, believe me or not, you can just say that I understand it and understand them right now, but believe me, in the future, you will need these notes for the beginner's class. In the future, you will need them for the beginner's class. I don't know where you will need them, but you will need them. Believe me, you will need them. So therefore, if you haven't liked them, mark you, or the benefit of you, the benefit which you have is that I usually record the video while typing. So therefore, go back on my YouTube channel, upload the video, write those notes. Simple and easy. Because do you see all these notes in the beginner's class? When we go in the advanced class, we will use the same notes to analyze the market. You will see some people saying, "Oh, it's lying there. He is writing to you." Anakudanganya. In the beginner's class, there's just some notes, but when you go in the advanced class, you don't need any much notes. You just need your analysis and your setup and your strategy. It's okay, you need your strategy, but where are you going to get the strategy? If you don't have the beginner's crowds, where are you going to do what? Are you going to get your strategy or where are you going to get your setup? If you don't have the nodes to know that this is a major currency, this is a minor currency, this is an exotic currency, this is a bearish market, this is a bullish market, this is the spread fee that I am going to be charged, this is the swamp fee, this is the wrong position or the short position. So therefore, make sure that you freeze, make sure that you type somewhere, make sure that you write some notes, because remember, you can say that you have your phone light, there. It's okay, well and good, you have your phone, you have your laptop. I don't argue with that. I don't have any issue with that. It's okay. But remember, you won't go everywhere opening your laptop. You won't go everywhere opening your phone. Sometimes even you need just to close your mic, you close your laptop, you switch off your phone, take your book and read. Sometimes even just go a week without even entering the market. Just taking my books, reading the notes, just read and read and read. Add some bit knowledge, taking some short notes. Do you know when you read your notes, when you read them, in one way or the other, you will find yourself remembering or coming up with something. You will see some different people using different strategy, and you are wondering, where are they getting this strategy? Let me just I don't know if I will tell you this, because let me just tell you this, because yesterday on Monday, today is on Thursday, right? On Monday this week, on the 12th, around 16th, 14th over there, I don't recall well, but on 14th, just know it was on Monday. If today is on 18th, just do your calculation, know when was Monday. On Monday, I was just perusing the notes, and I came up with the notes that I wrote. I came up with the notes that I wrote different some few weeks ago. Not even weeks, some few months ago. I combined them, my beginner's notes and my advanced class notes. I combined them. Do you know what I came up with? I came up with my own strategy. And today, the entire day, I have been like sitting down, practicing the same strategy that I was using. When I started trading, I was using another person's strategy, and it worked very well because it was profitable. But today, I have worked my own strategy, and I have seen that it has started working. And I was like, God, so this thing can work. Okay. Now I am just trying to perfect it in different way, in different sessions. Commodities, like in different section, I mean different time frame or different session. There is random section, New York section, all those, and different like types of trades. I'm trying to perfect it. If I see like, is it worthy being trading in for like the setup or that strategy, and then I go back to the commodities, the gold, the oil, the silver. Is it worth it? Now I go back to the gold, the crypto. Is it worth it to be traded with the Bitcoin? I have found some difficulties trading it in Bitcoin because it hasn't been perfected yet, but I'm trying to my best to perfect it. So therefore, take notes, please. Take notes if you want to be like on the safe side. Take some notes. Let's go back. We have said that time frame, this is the duration of time which helps you to take analysis in the market in different hours during the day. The same explanation, it will explain, it has been explained deeper. Where? On the candlestick. The candlestick says this. This is the candle which represents a specific time in the market, that is 1 minute, 5 minutes, 15 minutes, 30 minutes, sorry for that, 1 hour, 2 hours, 4 hours, 1 day. Why have I stopped 1 day? You will get some people asking, why have you stopped 1 day? But the candlestick usually don't stop in 1 day. It usually goes in another 1 week, 1 month, 1 year, and above and above. And why have you started in 1 minute? And the candlestick usually starts in 1 second. Here's your answer, because I know you have those questions in your mind. So therefore, the reason why I have started in 1 minute and the reason why I have ended it in 1 day, because I am a day trader. And a day trader usually trades within the day. A day starts where? The day starts when a day, 1 day, that's a day, like it's a recap of 1 day from 12 p.m. to 12 a.m. period. Nothing more, nothing less. 12 a.m., 12 p.m., 12 p.m., 12 a.m. Like that. Recycling every day. Sasa, don't go much in 1 week. Don't go much in 1 month, because that is another type of a trader. Types of traders. We're going to learn about them in the advanced class. There are different types of traders. So therefore, we are day traders. So therefore, we should be trading in between the day. Let's go on the other. Sorry, I am tired though. I'm just like tired. The day has been like very tiresome, but don't worry, we are about to finish. This is the last subtopic. Risk and reward. Risk and reward ratio. Okay, let's start with the risk. The risk is saying like this. This is the amount of money that you are willing to risk in a particular trade. End of explanation. The risk, it's like the bids. That's all. The risk, it's like bid. The ask, it's like the reward. It's like intermarrying. Somehow interchanging their phrases. That's all. Now, let's go back to the reward. The reward is said like this. This is the amount of money you'll get when the market goes as you wanted. Have you agreed? Self-explanatory. So, let me just explain it in a touch. I am tired. Sorry, not there. I want this one. Did the market went on the profit side, or you lose? You lost it. Have you seen it? The market that you opened, you lost 0.60. That's around 50 Kenyan shilling, or 50 to 70. And the market usually goes like that. Today it wins, tomorrow it bounces. So therefore, don't be afraid of losing, because even us, the pro traders, the profitable traders, usually lose. But as I've told you, we usually try our best to avoid losing, to avoid risking, or to avoid losing more, than the way we win. Sasa, Let's cut all those blah 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 stories and continue. Time frame. Let's open gold. Gold, here we are now. That is the time frame. Have you seen why I've started in 1 minute? But for this, it doesn't have all the other things, but it's good though. As I have told you, you should be like asking yourself which broker is the best if you want to trade. Now this one is the best broker for a day trader. That's how. For a day trader, because why is it a best trader? Because it starts for 1 minute. 1 minute. Now here is it. Do you see this one candlestick over here? Now this candlestick is open. That's 1 minute. This the candlestick that is going now, the green one. It's going up, down, up, down. That's one the what? The 1 minute candlestick. Here is it. Why am I going to say it's 1 minute candlestick? Because of here. If you look over here, around here, around over here, there's there is a number on the the right side corner over here. The last number here, 3, 2, 1, and go boom, another one. 1 minute. You see? Now that shows you that this candlestick, every candlestick over here, every candlestick over here, this candlestick over here, every candlestick over here, it's representing one what? It is representing 1 minute. This candlestick over here, from here up to here, up to here, that's 1 minute. From here up to here, 1 minute. From here up to here, 1 minute. From here up to here, every candlestick over here. This 1 minute, 1 minute, 1 minute. So therefore, let's go to another minute. 5 minutes. Now this one over here, one candlestick. Now this one, this candlestick, it's 1 minute. It's 5 minutes. Let me just explain it from the highest to the smallest. Sasa, let's start for the day trader. I said that we are a day trader. Usually deals with days. Sasa, now this candlestick from here, this one candlestick, this was yesterday's market. Yesterday's market, today's market. The day before yesterday. So therefore Monday, Tuesday, Wednesday, Thursday. You've understood? In a day trader, this is what? Day time frame. Day time frame, 1 day. Now the market started over here. The market started over here this week. Monday, this was the Monday market. Tuesday market, Wednesday market, this red candlestick over here. Now today on Thursday, this one candlestick. How many minutes are they remaining? I don't see any what? I don't see any. I don't see any time frame, any what? Any addition over here of any countdown, but it's okay. Let's go for the 4 hours, because we have said that candlestick usually present. Have you understood? Let me just go back so that you should understand very well. We have said time frame. This is the duration of time, which helps you to analyze the market in different hour during the day. Now this one over here, this table that you are seeing over here has different time frame. Don't forget that they have different time frame. If you look from down here, it has 1 month, 1 week, 1 day, 4 hours, 1 hour, 30 minutes, 15 minutes, 5 minutes, 1 minute. Final. That's time frame in FBS. Have you understood? Okay. From time frame, we go back to candlestick. And we have said this in candlestick. These are candles which represent a specific time in the market. That is 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, 1 day, final. But it has more: 1 week, 1 month, 1 year, 1 century, and go back. So, but as for the day traders, we usually use 1 day and the rest down. Sasa, now this is the 1 day. The market, if you look, Monday, the market was bullish. Tuesday, the market tried to be bullish again. But on Wednesday, market bearish. Thursday, market bearish. Now, this one, it's predicting that even tomorrow, the market will be bearish. So, don't mind about that. Let's go back. 4 hours. Now, how many hours makes what? How many hours? 4 hours making like 1 day. Let's say like 4 hours. Like 4, 8, 4, 8, 16. 4, 16, 17, 18, 19, 20. 20, 21, 22, 23, 24. So therefore it's like 2, 2, 2. That's 4, 8, 4. Around 8 to 6 candle, around 8 to candlestick, 8 to 6 candlestick. So therefore it's how from where? 1, 2, 3, 4, 5, 6, 7, 8. From here. From here, this is the day, 1 day. Over here. From here to here. That's 1 day. That's how. Now, this fork from here, from where? Sorry, I got like distracted. Nope. But let me just do it. We are talking about 4 hours, not 1 hour. 4 hours. From 4 hours, we are saying like this 1 hour, this candlestick over here, this candlestick over here, like it should be having 6 candlesticks. Let's start over here. 1, 2, 3, 4, 5, 6 from here. From this stronger candlestick over there. From this stronger candlestick over there to there. That's 1 day. Let's see. We want to see if they're telling the truth from here. 1, 2, 3, 4, 5, and 6 up to here. That's another day. Now, from where? From this day, from here. From here, 1, 2, 3, and 4, and 5. 1, 2, 3, 4, 5, 5, 6 over here. That's another day, right? Let's take another one from Monday. Now let's see from here. 1, 2, 3, 4, 5, and 6, right? 1, 2, 3, 4, 5. I don't know why, but it's okay. Now let's see. One, right? 2, 3, 4. Whew. Guys, have you understood? Those are 4 days. That are 1 week, from Monday to Thursday final. Have you understood? Let's go back to 1 hour. 1 hour, it is representing how many candlesticks? There should be 24 candlesticks over there, right? You are seeing the magic. So therefore, don't argue. Just follow the process, follow the structure of the market, and you will be okay to good. You will be good to go. How many are those? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24. Therefore, one day ended there. Okay, ain't bad. It's a good thing though. And still, the same thing happens to this market of today, right? Now, the same thing, the time frame, the candlestick, they are all the same. The candlestick and the time frame, they represent one thing. So therefore, let's go to the 30 minutes. The 30 minutes, the same thing. If you see down here on my right side, there are 3 numbers. The first one is a green bar, have their numbers. The second one, red bar, has its number. The third one, it's a time frame. It's counting down numbers for the what? For the 30 minutes. Now it's 27 minutes, 54, 45 seconds, like that. If you go back to like 15 minutes, the same thing, it has its own time frame. See? It has its own time frame from that, the way I marked up to there, 12 minutes, 30 seconds. Let's go back 5 minutes, the same thing, it's happening, the same thing. So therefore, the market, don't lie, the market usually be like that. That's how the market usually be like that, never try. It usually be the same thing. It has 2 minutes 10 seconds for the 5 minutes. Let's go back in what? In 1 minute. How many? 0 second, 3, 2, 1. 1 minute starts 49 seconds. The same thing. So therefore, that is how the market usually goes. Let's go for the risk reward ratio. The risk, tumesema this is the amount of money. Turudi hapa, turudi normal. Tukirudi normal, turudi in a day time frame. Let me show you how to analyze the market. Let's like say what, delete all those things, clear the charts, clear all charts, all indicators. Tukiangalia tutasema market inaenda chini. We are looking for a horizontal line from where? From here. There. We are going then to take another line over here. Above where we are marking the high, and you need the lower low and the high high. And the lower high and the lower low. Sasa the lower high it's here and the lower low is down here. Sasa then we are going then to mark in between the lower low and the low, in between the market, where the market has been breaking over here. The market has been breaking over there. Sasa still, let me just mark another spot where the market has been like the support and the resistance over here. There is this edge over here where the market has been like bouncing back, like there. Then go back for our time frame. Let's see in a 4-hour time frame what the market will tell us. The 4-hour time frame, the market is still going down. The market is still going down. Like the market has been dropping. So let's take a trend line. With the trend line, it will tell us, or it will show us how the market it has been going from here. And we usually say that if you want to know that it is a valid trend line, it should be having 3 touches. So the third touch is there. The first touch, the second touch, and the third touch. So therefore, the market still drops. Let's go for our 1-hour time frame. We are trying to analyze this market. So guys, we are trying to analyze this market. We are trying to analyze this market. Still, the market should go back up to there so that it can go back or it can buy. Sawa. Now let me show you some magic from here to 30 minutes. If you go to our 30 minutes time frame, now there it's where we are going to put our long position. We are going to put our long position over here. We are going to target this high over there, and then this low at least a little bit, just by there. So if that market goes at the way we want it to go, if that market goes the way we want it to go, it will respect it. If that market will like, it will go the way we want it to go, over there until over there, the long position, and this, let's still put another one. And it's not recommended to put the same thing at the same time, but let me show you another thing over here. From here, let me just like, okay, let me just take this one. Nope. Let me just take this one, squeeze it, I'll just up to that rev over there. Let's put it like that. Let's put it like that. If the market goes down, it will be on our profit. If the market goes up, it will be the same thing. Let's go back, still go back on our 15 time frame. If you go back on our 15-hour time frame, 15-hour time frame, the same thing. Like that. Now let me just do this, that the chart usually tells you, if you want to analyze a good thing, just always keep your chart clean, and it's gone. And the way we have just like tried to do something over there, but don't worry, The thing is, the risk reward ratio, we have said that the risk is whereby the amount of money you want to lose, you are willing to risk market. The reward is the amount of money you will get if the market goes as the way you want it to go. Now, when you use a path, let me just use a path. Okay, here's it. Let me just show you something over here. If you can look over here, over there, over there, over there, over there. Like, I'm trying just to analyze the market to see if I want to show you something. I'm just doing it roughly. Don't copy paste this one because it can cost you something. So therefore don't copy paste it. There, there, there. I think there's something over here, and just boom over there. Let me just squeeze it, put it in a normal size. Now, if you can look over here, the market has been just going up, down, up, down, up, and down. If this market goes up here, this market goes up to here, goes up to here, the market will go, bounce, touch that line, rebounce, then come back, and it will come back, it will go down and down and down up to this point that I am targeting over here, down here, targeting here, until around here, over here, because this market, you have seen it from the 1 day time frame, the market is bearish. So therefore this market has probability to go down and down and down. So if the market goes as the way we want it to go, we are just going to put a short position over here. Take this part until over here. The risk reward ratio, it should be 1:2. I forgot to tell you that, but the risk reward ratio it should be 1:2. You risk $1 to get $2. You risk $10 to get $20. You risk $50 to get $100. It should be doubling your reward. Sasa, you can't tell me just like you are risking. You are just like risking. How am I going to tell you? Okay, here's the thing. Let's take it like an example of a business. When you open a business, you have a name of getting profit, not losses, right? That in the process, you usually believe that you are going to have the profit. You don't know how you are going to get the profit, but you believe if you do some certain things, if you follow your strategy in one way or the other, you are going to get profit by the end of the day, or by the end of this week, or by the end of this year, right? Now, the same thing happens in trading. If you follow your strategy, believe me or not, the market, it will always appreciate you. The market, it will always appreciate you if you follow your strategy, and if you follow your setup. If you are humble enough to follow your setup, the market, it will always reward you. So therefore, the risk reward ratio that I am telling you, the risk is the amount of money you are going to risk so that you are going to get the reward of the market. But if you are jealous, if you are greedy enough, or if you are being pushed by greed and fear, the fear of being left behind, the market will go, it will punish you and take your $10, $50, $100, aiming to get. You can't tell me that you want to risk $1 to get $10. You can't. You are going to risk just $1 to get $2. You are going to risk $2 to get $4. That's all. The same thing. And guys, if you can see over here, my setup, the way that I set it, it has been like going the same thing, the same way that I predicted it, and it is been like it's obeying my command, the what I was telling it to do, right? That way, the market has been like starting to appreciate what I have done. So therefore, if you follow your setup, the market it will appreciate. Let's call it a day. That is the day how we end our day, because I have seen that my time has ended. See you tomorrow when we are going to talk about take profit, stop loss, how I have taught you how to read the chart, how to analyze the markets from day 1 up to 30 minutes, 15 minutes. So therefore, that is it. Now we are going, I will just take like, let me say how many minutes, like 2 to 3 minutes, then I come back, show you how to put the stop loss, take profit, and the risk management. See you next time.